Good morning, everybody. It's Sunday, June 27th, 10:30 a.m. my time. Price of Bitcoin right near $33,000. I hope you all had a fantastic weekend, but we got a new week coming up and we have lots to cover. So today's analysis is going to be about looking at Bitcoin from the standpoint of the larger time frame, comparing it to the 2013 double bubble cycle that people are talking about. Are we going through a Wyckoff distribution or an accumulation phase? What are the on-chain metrics telling us about Bitcoin? Where is the crypto fear and greed sitting at? And all other things related that can help us get a better understanding of what the heck is going on in this market. So stay tuned, hit the thumbs up, and let's get started. First things first, what we're going to do is start off with the daily time frame on BTC. One of the most common discussed topics in crypto is, are we going to go down further? Are we in a Wyckoff distribution mode? Are we in a Wyckoff accumulation mode? What's going to happen next? Everybody wants to know what everybody else's crystal ball is saying. The one thing I can tell you about markets, having traded them for about 12 or 13 years now, is no one has a crystal ball. And if anyone does, they probably have a pretty crappy crystal ball. So in down markets, it is very common to start looking to the next person for answers. What is this YouTube person going to tell me about where Bitcoin is going to go up next? When is it going to go up? How far is it going to go up? When will this pain end? How far are my altcoins going to go down? When will they pop back up? All these answers are something that most people are looking for. And I'm here to tell you, at least right now, honestly, I don't have those answers. What I do really well in markets is be able to fend off risk and cut risk when it's unnecessary to take. I know how to manage my positions and take profits. And I know how to trade markets when they're in nice trending environments to be able to hedge, take shorts, and defend my positions in markets that are seemingly doing pretty well. Okay. But at present moment, what I've been doing for the last several weeks is just sitting in cash or just taking level to level trades here and there, or simply just going short, because that's really the formula that's been working for me. So what I see in the market right now is a clear Wyckoff distribution phase that's been playing out. And it looks something like this. I'm sure if you're watching my video right now and you're commonly going on places like YouTube or Twitter, many people have talked about this. What other people may not have spoken about in terms of the distribution schematic is how far it can extend to, and when does that invalidation for the distribution schematic end? So we know for sure that this distribution schematic has been playing out from this point onward. This head and shoulders top pattern that you see up here, it has been playing out. On top of that, what we have in here is another potential distribution that may be playing out, or another potential accumulation that's been playing out. Now, the accumulation pattern is really interesting because what people are discussing on Twitter is, oh, well, this looks like a clear, Wyckoff accumulation area. And then from here, we have to pop back up. So what they're really pointing to is something like this. And what most people are talking about is if we're in the spring phase of phase C. Now, while I believe that at this point, it was possible that we may have been in the phase C, what we really did was after the phase C, we went up, hit key resistance, and then we rolled back over. And then now, again, we're unable to really show a whole lot of strength to keep pushing up. So until we start seeing more continued strength and breaking above a key resistance level on this 4-hour time frame, so we have to at least break above 35 to 36K, then we can talk about maybe this Wyckoff accumulation piece might be active. For now, though, I still find it hard to believe that we're still in the Wyckoff accumulation phase. So to me, this area was a potential for a accumulation, but we're spending way too much time down here. So to me, it's invalidated. Okay, the Wyckoff accumulation phase in this area is invalidated for now. But what do we do from here, right? Well, here's the thing. Okay, on a daily chart, we know one thing for sure is that we continuously keep grinding down. There's a lack of bid in the market, and we're just struggling to find strength of buyers to help drive up price. Now, what we're going to do is discuss, first of all, where is that pressure coming from in the market? Why does it matter? What are the surrounding things in terms of news, FUD, on-chain metrics that are showing us what kind of pressure we're dealing with? So let's first start off with Lynn Alden's post, which is recognizing that miners overall, especially from China, are clearly struggling, right? We know that because we see a myriad of problems coming from the news that's coming out of China, which is the Chinese traders are really getting hit with regulation and fears of closure on exchanges like Huobi and OKX. We know that miners are getting crackdowns from the Chinese government and regulatory bodies in China, and that is visible by one metric, which is the network hash rate, which is basically the difficulty and the work that the miners put into the network. And this kind of activity that's showing us a huge cliff of a fall off is basically unprecedented. From the history of Bitcoin, it's really never been this low in terms of its struggle. So we know something is clearly happening in the Chinese miners network. Okay, so what exactly is happening and why does it matter? Well, when you know that the Chinese government can easily crack down and force China miners to sell or close down operations, well, what do they do? Well, they might have to start maybe relocating their equipment and going into a different city or country to start mining again, or they might be forced to start selling some of their assets, like their equipment or like BTC. Now, we've seen actually evidence of both, which is equipment from China was actually moving to other countries like the US or being sold. And number two, we're seeing the volume from miners overall still continuously come into exchanges and get sold. Now, at present moment, I don't think the Chinese miners have a whole lot of asset to sell, but nonetheless, they are still creating a downward pressure on the market. And remember, for the most part, miners typically are the consistent holders of supply. They can generate the supply and keep selling it over and over. So we know for sure that the Chinese miners have been selling assets continuously, okay, because they're forced to do so. Okay, so we have two data points. So now the third thing is exchanges, Huobi and OKX, the biggest exchanges in China, still struggling with what's happening with regulation from the Chinese front as well as the US front. Okay, so Huobi and OKX are clearly struggling with their traders having to withdraw assets from their platform, close down operations, reduce leverage. And all this is visible by a quick Google search that you could look up about Huobi or OKX. Okay, and this is from the Bangkok Post. Now, the other way to look at data in a more visible manner is something like this. Okay, so if we actually go to one of the charts that our friend Zahir posted, okay, really smart guy, it's this. All right, this is an understanding of how much BTC balance was on exchanges, and this is Huobi chart. So if you look at the last month or so, look at the chart and how it's continuously going down. Well, this implies that assets are actually getting removed from Huobi. Where are they moving to? They're moving to Bitfinex. Okay, so the good thing is, okay, we know that the assets are moving, and we know that they're moving to an exchange like Bitfinex, and some of it is actually getting sold because of the data I just previously showed to you. So good thing is that all the assets of BTC are not getting completely liquidated. They're moving to Bitfinex, but we also don't really know the certainty of what is to come next of this whole China news, China FUD, whatever you want to call it. So we have to wait and see, right? Exactly how that's going to pan out. Well, what is the next piece of point that I find important to discuss? Well, one of the things that I actually found out from a tweet thread was, by Kobe, right? Basically, someone asked him, why don't you believe in the double bubble scenario anymore? What changed? Well, he talked about institutional narratives did not play out. Nobody bought except for Tesla and MicroStrategy. Blow off top didn't even happen in Bitcoin. Sell pressure was so large. Complacency balance on non-pure retail assets was weak as hell. Charts look horrible. China stuff worse than people think. Okay, this was just a couple days back. Now I tend to believe that because one of the things that's largely happening is, first of all, we do see a lack of activity and a lack of bid, not only in BTC, but a crypto-wide exodus that's happened from traders, from investors. And this is visible by volume. This is visible by, obviously, the structure of the market continuously grinding down, right? All these things are very evident and hard to sort of dispute because the market overall has been continuously grinding down. And the only thing that could change that, the only thing that could change this whole distribution schematic is if BTC goes into a short squeeze mode and then gets above this area previously that we broke down from, which is the neckline of this head and shoulders pattern, like right around here. So if BTC gets into this area and starts pressing up higher from here, okay, then that means that from here, we might be starting a new cycle. But I think it's entirely possible, okay, I think it's entirely possible that BTC can get even into this area, short squeeze up till here, and then roll over again. Because this is really the strongest area where we found multiple months of support and then nuked from. We have yet to retest that as resistance, right? So I think it's possible that we get to this area, but doesn't mean that we start a new bull market, okay? Now, we did something similar to this back in 2019, for those of you who were around back then, right? And I'll show y'all real quick, okay, how that looked. I remember this day specifically because I think it was on a weekend, if I'm not mistaken. And if you look, we had a month-long range right here. We had previously broken down like this. So almost similar to what happened up here. Okay, so if you look over here, right, we broke down from here, spent 1 month sideways, just like we spent 1 month sideways here. And then just out of nowhere, literally out of nowhere, there was this whole, China news that came out. In 2 days, we had a movement of how much? About 23 to 24%. Okay. Actually, technically, we had much higher movement because this wick went really, really high. Right. So basically, the point that we fell off from, which is around here, and we dropped, price basically covered that whole gap and then continued to roll over for another several months and then did this, right? So the point is that where we are in the cycle right now, it's my personal opinion that we are probably doing something similar right now. Now, it's not necessary that we have to have a short squeeze in the market and then roll over in the same manner that we did back here, but it is possible. Okay, it is definitely possible that we do something like that. So that's one of the things that I'm paying attention to. All right, so we talked about the Huobi news, right? The other thing that we obviously recognize is how much of the Bitcoin miners are selling and then how much are large wallet holders or large whales accumulating. So one of the things that's happening is larger whales, which is probably like a multiple thousand Bitcoin and up, are still accumulating assets, meaning they're accumulating BTC. The retail crowd that got in over the last several months has been continuously selling BTC, and they've been completely getting washed out of the market. So that's actually a sign that people talk about, a potential bottom in the market where large whales again start buying and retail start selling. So it is possible that this could be the low if we still see more and more retail selling and panicking, and then more large wallets buying. I think that's entirely possible. Again, we still need confirmation, right? We need to see price break outside the structure, this descending channel, and then next step above 40K, and then next step around 47 to 48K. All right, that's how I could see market starting to push up and break out. Now, the other thing that we clearly recognize is in this area, what's been very true is, first of all, funding rates are aggressively negative for the last month or so, meaning people are paying lots of money to basically be short in this market. And the one thing that has rung true for the last several cycles in BTC is typically BTC does not drop heavily on negative funding rates, especially continuously negative funding rates like this. So one can make the argument that in this area, as BTC continuously grinds down, okay, so as BTC continuously grinds down, there might be a trapping of shorts and sellers down here, and there might be a big squeeze that may be setting up over the next few days. Now, again, we don't know that yet because we really don't know how weak the market is, right? That's one thing that we definitely don't know. Okay, so what we have to keep in mind is, okay, well, we know the market is not that strong. We know that it continuously is grinding down, but we also know that there are other metrics that are telling us that funding rates are still continuously negative. This sets up a decent, bias for a potential short squeeze, right? And we also know that the fear and greed sentiment index has been heavily in the fear for the last few days, few weeks, and the last month. So typically these things added together where price keeps grinding down lower and lower, okay? Funding rates being extremely negative. The fear and greed index showing us that there's a lot of fear in the market could set up for a potential short squeeze. Now, I just pulled up this chart earlier and I showed y'all that the BTC USD shorts, now this is Bitfinex mostly, okay? We saw a couple days back that these shorts rose up a lot, but now they're closing down again, right? Now, I really don't know what's going on here, but what I do know is Bitfinex players are very smart and they have very deep pockets, meaning they're really rich. And they're typically very spot on with their positioning in the markets. So when I saw this movement up, okay, in this area, I was scared to be long because when you're seeing shorts go up on Bitfinex and the market, BTC prices are going up, that means what Bitfinex traders are doing is they're filling up short positions as the market keeps going up. And they'll close out their short positions as they pressure the market down. And that's actually exactly what happened a couple of days back. And I'm sort of recognizing something similar happening over the last few days again here. So my intuition right now is that, okay, it looks like the market went down the last couple of days where at the same time the shorts were loaded up, but now the shorts are coming off and the market right now over the last day or two has been moving up. So maybe those shorts are not pressuring the market down right now. Maybe what they're really saying is, okay, well, we don't have really the capacity to short this, or we just don't want to. And maybe that might imply that the market might pop up, right? So I'm giving you guys all these points of data and metrics so you get to understand a more full picture, okay? Now, my positioning in the market for the last several weeks, as I've told my Advantage community, has been just sitting tight in cash, taking level-to-level trades, and mostly just shorting altcoins. Because the one thesis that I had held for the last few weeks or the last month and a half is if we look at BTC dominance, right? Dominance was actually coming off the lows like this, right? And I told my members that in this area where Ethereum was, where Solana was, Rune was, right? Rune was way the heck up here. I shorted Rune here. Sushi, I'd mentioned to my Advantage members that I started to close out some of my sushi like somewhere around this area, right? And as prices started to trickle down, I stated that this is probably the perfect formula for BTC dominance to keep going up. Maybe even the price action could even continuously keep grinding down, and it can heavily bleed altcoins. So in fact, it doesn't even matter what's going to happen with Bitcoin prices. Whether they go up or whether they go down, I believe that altcoins are going to continuously get beat up, and they're going to head down further and further. So again, I'm kind of just sitting in cash, just waiting patiently and not really doing a whole lot with altcoins. With BTC, I still tend to believe that, the market is going to continue grinding down. But again, you want to see an impulsive move down from here, right? I don't want to see something like this and then the momentum fizzling out and then the market starts doing something like this, where the market was overwhelmingly pointed like this and now it's starting to turn around like this, in which case then we know for sure that this is likely a bottom, and then from here we might pop back up. Okay, so the only thing that I'm personally willing to trade right now in terms of the long side is probably BTC. But even there, I'm still cautious. I'm taking smaller trades, not big size, right? Level to level trades here and there. And that's pretty much it. Okay. All right. So we spoke with the fear and greed index, the funding rate. Okay. So let's close these out. The other thing that happened, I think, over the last couple of days was Binance was supposedly banned by the UK, by their FCA, so the Financial Conduct Authority. I don't really know what kind of impact this is going to have, but obviously Binance is the exchange for a lot of retail traders, especially from the UK and from all over the world. So if this is really going to hamper their volumes and their movement in the market, it's something to pay attention to. Okay. Let's see what else we got. NVRVZ score, obviously, we did not hit the high that I previously spoke about in previous cycles, right? I told you all that typically we expect the Z score to hit this kind of overbought area and then the market to come down. Obviously, the market decided to sell off well before this area. Could be very well due to the fact that, these models are still very young, right? There's only 8 years of data in most of these models. And for the most part, it is entirely possible that, these models need to be revamped now that we've had this cycle come down. So going forward, these models will get better, right? But this is not really helping us, other than the fact that now we have to maybe assume prices have to come down into this green zone right here. Okay, and in this green zone, I don't really know how deep prices are going to go, right? It's not necessary that the prices have to go as low as 3,000 or anything like they were in these two drops, but just something to pay attention to, right? It could be 15,000 or 20,000 or 25,000, depending on how fast this movement comes down. Now, the other thing that I pay attention to in the market is CVD, which is cumulative volume delta in spot markets. Spot is basically the actual asset of BTC. And the one thing that I find very discouraging that's happening in spot markets is if you look, spot is still going down, meaning there's a lot of heavy selling that's still happening in this area, while price is remaining sideways. So one can make the argument that, okay, on this area right here, okay, in this area right here, we do have spot selling happening, but price is not budging. So that could be a positive, right? So this is your spot selling going down, and this is your price just kind of remaining near a base. Now that is sort of indicative of, okay, well, maybe there's a lot of absorption happening in this area. So even though there's a lot of net selling happening, price is not just breaking through the floor. Okay, fair enough, right? I understand that. But the other part of the market, that I don't quite like is that, first of all, we know very well that open interest has come down a significant amount, right? And so far, it's basically sitting at these lows right here. So what does that indicate? Well, basically that indicates that levered traders are largely still very cautious and not willing to jump long in the market. And we know, obviously, because of the funding rates being negative, right? We know that for the most part, leverage traders are still short. Okay, so maybe you can make the argument that, okay, well, because there's so much offside positioning, because levered traders are now aggressively short, but not really at all long, okay, what if the price does start going into a short squeeze, in which case we might see price aggressively push up, right? Because we know that someone is accumulating this spot, even though there's a whole lot of selling happening. And we know for the most part, there's a lot of people that are shorting. So because of that offside positioning, we can make the argument that the odds of a short squeeze are maybe higher. Okay, so I've mentioned short squeeze a bunch of times because I think the market is setting up in a very similar manner like it did in 2019, right? I told y'all, like, back here when we saw this movement back in October 2019, I'm getting very similar vibes of that. Now, I'm not quite sure if we're going to play it out the same way, but it just seems really, really similar of how things are playing out this time around. So just something else, that I'm just watching. All right. So anyway, I think that about covers my outlook on the market. I'm expecting BTC to chop around here. If it does nuke, right, I'm expecting BTC to break somewhere around maybe 25, 24K, which is around this area, but not at all necessary. Like, the other thing I look at is if you look on, say, something like BitMEX, right, these lows, okay, are cleaned up on BitMEX by this wick. But many other exchanges like FTX, Kraken, Coinbase, they have not gone past these lows from back here. So that means that they might still need to come back, clean up these lows, and then we can start pressing up. So something else that I'm kind of paying attention to is maybe we need to have another sweep down and then start pressing up. All right. Anyway, I hope you guys enjoy this content. A lot of this information I talk about with my community in our Advantage side, which you can go sign up on thealphatrades.com, the products page right here. And you can sign up for our Advantage membership, $97 a month. That gives you access to all these channels. And of course, our 5K challenge, which we started at the beginning of the year. Beginning of the year, what I basically did was I started off with $5,000 in my account. And so far, obviously, I've grown that to about close to about 16,000. So, good 3X, a little bit higher than 3X. And I think people like this challenge. People are really enjoying watching me trade and watching my analysis of the market. Of course, I don't provide financial advice. This is not for copy trading purposes, but just showing my Advantage members, my paying members, of how I go about trading in the markets has been extremely helpful to them. And of course, in our Discord community, right, we have these channels where I discuss all my outlook on the market, the things that I'm looking for, what I'm paying attention to, what I'm thinking about trading, even in the altcoin space, even in the DeFi space. All this stuff has been extremely helpful and kept our members active in our community. So if you want to join, again, hit the thumbs up, come join our Advantage membership, and then just shoot me a message when you sign up. All right. Cheers, everybody. Take care. Good luck in the market.